All right, Barbara, let's talk about this favorite subject of yours. I don't really like to talk about it, but we gotta talk about it. Trading futures. So, welcome to the call. Let's get into another training. I know we got into a 50% retracement and went over some charts and stuff last week. So, let's get into it. See what Barbara, where we at this week. Let's turn it over to you. You ready for us?
Yes, here's our disclaimer for our Futures and Commodities one on one trading group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
All right, all right. Well, Barbara, I think we had a couple quizzes. Can we stay with you?
Yes. So the first quiz is, what formula do we use to determine the 50% retracement on a chart? A. Take the lowest price and divide it by 2. B. Subtract the highest and lowest price, then multiply the total by 2. C. Add the highest and lowest price, then divide the total by 2. D. Not sure. E. None of the above. F. All of the above.
See.
Okay, Steve says C. Add the
See.
highest and lowest price, then divide the total by 2. And somebody else said C as well. Who was that said C?
Pam.
Oh, Pam. Okay. All right. Well, looks like C it is. You add the highest and lowest price, then you divide the total by 2. That gives you the 50% retracement. That is correct.
Everybody clear on that. That's our first activity when we go onto a chart. So we want to be clear, crystal clear about that, especially the reason we do it. All right, let's do it. What you
All
got,
right.
bro?
The next one is a quiz. It says, did corn make a 50% retracement? So let me share screen. So this is the corn chart. It says A, no, B, yes, C, not sure. Did corn make a 50% retracement?
Yes.
I said yes. I'm gonna talk to us, y'all. Anybody else beside Pam?
Yes.
Alice, you
Yes.
said it. Okay. Is there anybody that said no? Better yet, is there anybody that's not sure? All right, well, look like they all agree with Pam, Steve, and Alice.
Yeah, it looks like it did make its 50% retracement.
Look like it's spot on right there at the point,
Right
right?
there at it. It's like right there at the 50%. Yes, it is.
Okay.
All
I think
right.
we had a bonus.
Yeah, we got a bonus question. It says only one win per quarter for the bonus question, everyone. Special prize to the person who is first with the correct answer. Give me the 50% retracement for this chart. Post your workup with your answer. So I'm going to share the screen back again.
Explain your work.
It's coffee July 24. So this is how the chart looks.
Come on, somebody tell me what's the answer?
I'm sorry, repeat that again.
It says find the 50% retracement for this chart. Explain your work. So you got to give the highest price, the lowest price, the total, add the two together, and then divide it by two to come up with the 50% retracement.
Sure hadn't done a 50% retracement at the grocery store, that's for damn sure.
Right about that, my friend.
Uh,
I just bought coffee at Sam's, $15.34.
How about that? Mm, crazy. So, yeah, we talk about the importance of doing the 50% retracement and understanding how to do it. And right now, I'm a little unsure whether y'all understanding. We only had a few people to answer this quiz in the group.
didn't see
And,
it
and
until just now, so I'm sorry.
okay.
Yeah,
And
but I know how to figure it.
come on, fam, because y'all making me think we need to stay right here on 50% retracement again this week.
Okay. So it's you take the
Can we,
lowest price point and the highest, and you add them together and divide it by two. So it looks like I just kind of threw the rounded number. It looks like 170, but 175, I guess. 172, right? And then 245. Um, and then you add those two together, I get 417. And then you divide it by two. Hold on a second. 417 divided by two. And you get 208.5. But I see it looks like it's like 225, 9.9. Is that what you guys came up with? Because I'm just
Well,
throwing numbers.
I'm
Hmm?
just
Current
glancing at
price.
it. Is it 210?
Yeah, it's around there. 210, 208, 29, 209,
yeah,
something like that.
I wanted you to give me that around about that number figure because I know you couldn't actually give me the exact,
Right.
because, but I wanted you to just be real close in the vicinity, which is 208, 209, 210.
Yeah.
And
okay. I gave you 211.
well, you still in the area. And the point is that lets me know if you understand how to do it, and and you know if you in that area, and, and I know you can do it. You understand how to do it. So everybody good on 50% retracement. Or do we need to go over any charts? Is there anybody who still not clear on it?
No, I'm crystal clear on
Okay, good. All right. Well,
it. Like Pam said, you take the highest and the lowest and you add them up, and then you come up with whatever the total is. You divide that by two, and then the answer from that dividing problem is your 50% retracement.
very good. Well, the first person to give me the number in that vicinity is the winner of the prize, which is ticket to that, that crazy thing that I keep talking about at the end of April, that in Arizona. That what you call it, Barbara?
Traveling.
Oh, the retreat.
Yeah.
Yeah. And who was the first person? I
V.
think.
V was the first person. She got 210.
Yay! Winner.
Congratulations, V.
Thank you.
Congratulations, V.
Congratulations.
Thank you so much.
Congratulations.
Yes.
Thank you. I'm excited.
Well, you know what? I'm across the pond all the way to Arizona. We definitely want to see you in the building, V.
I'm finally going to get there this time.
Awesome. Awesome. So, guys, people can come from all the way from London. So, let's make it happen, y'all. Congratulations, V.
Yeah.
All right. So, Barbara, what we talking about this week?
This is lesson 7 on order types. This lesson can be found in lesson 4 in the manual Futures and Commodities 1-on-1. So Delvin just talked about a lot about the retreat. We want to see you guys there. We want to see you in the building April 30th. We got a special guest coming.
Yeah, I want to
Gonna
be in the
be
building. Who
there.
want to be in the building? I need want to be in the
You
building.
want to be there this year. This
You
is,
want to be in the building.
you don't want to miss this one. Very special guest coming. It's a surprise. I can't tell you guys, but you're going to want to be there. Of course, we're going to have Mr. Johnny, Mr. Eric, and Delvin as well. So, and we got this book going on that we teach from every Sunday called Futures and Commodities 1-on-1. If you guys don't have this book, I can't stress it to you enough. Get this book, it'll help you during the week. Really learn this. All the lessons have been compacted and put into this one manual. And if you bought it, leave us a review. If you haven't and you're going to purchase it, make sure you go back and leave us a review. We greatly appreciate it. Everyone that has purchased it. But this will really help you do well in this business. Coming on the Sunday night calls, that helps you too, but this helps you even more. It's just like when you go into school, you have a textbook. That book, you know helps you in that class for so many hours, but then you take that book home and you can read that in your liberty, and your spare time you can really learn from the textbook itself. So that's why we want you to really get it. So thank you to everyone that already has it already. And before we go
You
any
know what, Barbara?
further,
I think
yes.
the main reason that you want to come to this retreat, the main reason you want to get to this retreat is to learn a strategy that's not in that book.
Oh yeah, we there is going to be revealed a surprise strategy that Delvin and Mr. Johnny have never taught you on this call. You've never heard them teach this strategy, and it works, and it works very well. I mean, it's a strategy you could just do that by yourself and and build a business just that alone by itself. I'm gonna just leave it at that, but I'm gonna just leave it right there. But you wanna only way you're gonna hear about it, you gotta come to Arizona because he doesn't teach that on this call. So
Mm-hmm.
encourage you guys, you gotta get there. If you can get there, get there. Go ahead and work on it. You want to be there. This is the year.
Yes, indeed. Who are the special thanks you got going on?
That would be to the CME group. Guys, this is the biggest exchange worldwide. They have excellent education and videos, and we use their material to teach you by. and also barchart.com. That's our go-to platform. If you don't already have a free account, um, go to barchart.com. It takes really less than a minute to set up a free account with them. But they have some of the best education. They're on all the financial channels. If you've ever looked at the Bloomberg, all the financial channels, they use Barchart, and that's what we use too. So special thanks to CME Group and Barchart. All right, let's get into some order types. Back to you, Mr. Johnny.
All right.
All righty. What are order types? Um, it's something you need to know. Um, these are instructions to the broker about how to enter and exit your trade. Okay. Now this is an example of a confirmation that the broker would have. All right. So next. All right. So there's a bunch of different types of orders. All right. But here's what we want to basically talk about. We want to talk about a market order, a limit order, and a stop loss order. All right. Or a stop order. Okay. So what is a market order? Uh, and when do you use it? All right. So I want to talk about those two topics. A market order basically means you're willing to take whatever price there is, high or low, to get in or get out of the trade. I want to make sure you understand that. To get in or out of the trade. All right. Now, basically, it means the buyer is willing to take whatever price somebody's willing to sell it for, and the seller is willing to take whatever price somebody's willing to give them for the trade. Okay. Um, I don't know if it's appropriate. The only time I use a market order is when the market is really fast and I really want to get in the trade and um, the spread is very small. Okay. In other words, I don't have to fight to get in the order. There's a saying, it doesn't make any sense to try to squeeze a fraction of a penny out of a trade and miss the trade. Does that make sense? All right. That's a market order. I typically don't use market orders. All right, next. The next is a limit order. And you're going to hear us talk about this all the time, especially when we talk about how to enter into a trade. You want the market to come to you. You've got a specific price that you want to pay to get into the market. You know, so you're going to place a limit order that says, I'm willing to pay this much to buy the order, or I'm willing to take this much to get out of the order, out of the trade. Okay. Uh, and that's basically the limit order can go on both a buy or a sell. So I want you to understand this part. If I'm going to trade the market down, then I'm going to sell that contract. Even though I don't own it, I'm going to enter into this trade by selling an order. But I want to sell it at a specific price. So that's going to be my limit sell order. Okay. Next. Now, here's where a limit order is essential. So when we place our stop order, all right, it's the ability to exit the market at a price or that's determined by the seller, or excuse me, determined by the trader. When the market trades to this price, it triggers a market order to sell. Means you're getting out of it. All right. This can be a buy or a sell order. Right. Now we're gonna cover this extensively, but when you get into a trade and you set your stop loss, that is going to be a limit order always. Okay.
Hey, Johnny, do we ever trade without using that stop order?
Never. I think there's a rule, correct?
Correct.
Yep.
We never trade without a stop loss. Now, the others, one is called a GTC or good till cancel. Your stop loss will always be a good till cancel order. Okay. This gives you the ability to remain in the trade until your order gets filled or canceled. Um, the second is a day order. This order will be open until the close of business that day. If it's not filled, it will cancel. Okay.
Hey, Johnny, make sure you're clear on what you just said. So you're saying that limit order you just talked about, that buy limit order or that sell limit order, that can be either one of these, a good to cancel or a day order, right? But that
It's
stop loss order
no,
you
your
talked
your
about,
good till cancel will stay open until I don't want to say indefinitely, but it stays open until it's canceled or
but
filled.
that buy order or that limit, that buy order, that sell order that you play, you can make it a good to cancel or a day order, either one, right?
That's your buy order can be either a day order or a good till cancel order. Yes,
But that stop loss order you mentioned, you said that one needs to be what? Make sure I heard that again.
good till cancel. You
Make sure
want
everybody
that
understand that.
you want that order to stay open until you complete your trade or you get stopped out.
Make
When
sure
you
we
get
all clear on
stopped
that.
out, when you get stopped out, that means that order fills.
Excellent, Johnny. Excellent. Very important.
I think what's the next slide? Questions?
Yes, it's Q&A.
We never place, we never ever place a, a limit order good to cancel, buy or sell, and then place a stop loss order as a day order. That's what Johnny is saying. Y'all make sure you understand that we don't place our stop loss as a day order. It's always GTC. Very important. We don't want to get into the trade. Our order get filled, and our stop loss order was a day order, and now it's canceled. But our limit order just got filled. Now we don't have a stop loss order. So that's why Johnny said you always make your stop loss order good to cancel. Very, very important. Anything you want to add, Barbara?
No, you pretty much covered it.
It's a lot of orders, like Johnny mentioned. It's a lot of orders that you can place. But we use these orders that we're talking about tonight pretty much on a regular basis. These are the main orders we use. So we focus on them. But there's a lot more. And Barbara has a whole list of a whole multitude of orders if you want to look at them in a Telegram group. But these are the main orders we use on a regular basis. So that's why these are the ones we want to really get familiar with. Like Johnny said, I'm the same as Johnny. I'm pretty sure Barbara say the same thing. I rarely, hardly ever use a market order, just like Johnny B. I don't know about Barbara. I think Barbara the same. But it's very rare you'll catch me using a market order. I want the market to come to me. I want to set the price that I want to pay in or out of a trade, like Johnny said. Most important part is we can be in control when we getting in the market, no matter what price the market trading at. Because of what's so important when we trade is our entry. Our entry and our exit very, very important. So therefore we use a limit order because we know where we want to enter and where we want to exit. And we may not get filled at those prices when we trade and use a market order. But if I know where I want to enter the trade above or below the number two, I'm placing a limit order so I can get in where I want to get in, or get out where I want to get out. Hope this makes sense to everybody. But Johnny, Bobby, if I don't have anything else, we can open up for questions. But yeah, let's talk about any questions or any comments you got about orders that we use and place. Very, very important to know.